Hey everybody, good morning. And what's going on, everybody? Goose topping the list today. Glad to see you, my man. As always, Lieutenant Colonel, Infinity, AT, Eric, Dan, Rex, Don, Amy, Robin, Alan, The Last Warrior, Gaten, Ed, Maurizio, Indy, Ivan, Wade, Rick, JB, Brian, Nikki, Donald, Sledge, my man. Good to see you, as always. Francois, Laura, Campbell White, Cam, good to see you, my man. Mary, Joseph, Rosalind, Kevin, Steve, Dave, Helen, Andreas, Ellen. Welcome, everybody. And hopefully everybody got through the starting ad or whatever happens. My wife's like, there's an ad that plays. And then Nikki was like, I'm always trying to like skip to get to the what you're actually saying. So hopefully everybody got through. There's Kimberly now, my favorite subscriber in the whole world. Welcome, everybody. Now, here's the deal. Y'all saw the thumbnail, right? Are we riding the waves higher and ignoring the tsunami? A potential, well, the worst ad ever. Was it like moths or something like that? anyway, potentially the U.S. has been in a recession for a few years. JT, this guy right here, pointed out. I have a video back 2, 3, maybe 21, summer 21, I think, where I pointed out that we had 2 consecutive quarters of negative GDP, and then they decided that wasn't going to fly. Like, we cannot accept that. So we had to fix that, make the GDP not negative. Now, I'm going to share some things. I've talked about most of these things, but I found an article that kind of summed it all up, put it all in a nice little collection here. And it really concerns me. I've been talking about it, that maybe we're staring down a depression, and the signs just keep piling up, and it really, really scares me. And another analyst, not really guru type. He didn't throw out trades, but he's an analyst that many of you know I follow, that I really respect. He wrote a scary piece this weekend, and put it out to everybody, that he basically feels like this right now in the market has the exact same conditions that we had at the end of 2019 rolling into 2020, where we just kept grinding higher highs while all the chart patterns don't look good. And I've been saying that chart patterns don't look good. And he now agrees that the chart patterns don't look good, even though we keep grinding new highs. Anybody remember what happened in early 2020? It had nothing like, the funny thing is, this is really hard for a lot of people. If you can decouple your brain from the story that happened in 2020 as the reason, and actually look at it that the charts needed that pullback. And that's why I was positioned the way I was. And the story was why I was in the things I was in. But I was already ready for a drop. And that's why some of my stuff doesn't make sense to anybody. Like, why were you trading that into the COVID drop? Only a third of it, of what I made, really had to do with COVID. You could say maybe 2/3. And, the rest of it all was kind of like collateral damage, trading the VIX. Well, of course, if the market drops, VIX is going to spike. So, it's just being in the right place at the right time. Now, when's the right time? Not yet. We're still making those highs. If you go back and look at the charts in 2020, we made a high coming into January. Then we got the first little dip, and then we came back up in February. And then we rolled on off into March. And boy, did we roll. So there's going to be opportunity, all right? So, yeah, that's it. Now, and also, my good friend reminded me of a quote from Jesse Livermore. And if you've never read or, I read I listened to the audiobook from him just last year. Um, Reminiscences of a stock operator or whatever, and it's a really good book. Now he said he never made the big money being right. All right, somebody is right a lot, right? It was what made him the big money was being patient when he was right. So you guys have heard me being very patient in crypto, even though there's some rocky rolly stuff happening the last week. You've got to be super patient, and you got to give it enough rope, but you also got to know when you're wrong. So look at here at the employment levels. This thing decoupled. All right. The non-farm payrolls keeps rocking and rolling higher, but the employment level has leveled off. And this is just the Fed's own numbers from the BLS right here, Bureau of Labor Statistics. And then we go look at some other things. If we go look at new manufacturing orders, keep claiming that we're getting all these big orders, but if you inflation adjust these orders, we're actually dropping. They've been declining. Like they do these orders on dollar value. If you take the dollar value of the orders and you actually adjust them, manufacturing orders have been declining. This is concerning. Same with retail sales. The nominal number, retail sales are rocking and rolling. The inflation real adjusted number, declining. And then the unemployment stuff doesn't even count. Like you don't even count homeless people in the unemployment. And CPI, let's make this one a little bigger. So if we use the official CPI, that's the blue, we're down here. If we use the estimated CPI using the pre-1983, before they really started taking all the stuff we actually spend money on out, we'd be up here at 10, and we spiked up to almost 20. Now this is more like I really feel like the upper one, the yellow one, is more accurate because when forex traders, foreign exchange, forex currency traders, there's a lot of them internationally. All right, there's not so much here in the United States because we have the stock market and forex kind of gets dull when the U.S. market opens. But the rest of the world trades forex, and it's hot when the U.S. markets are closed. Makes it difficult for me to trade because I can't stay open, stay up, do all night trading, keeping track of forex, and then come in here and do what I do. I gotta have some downtime, some rest. So, but they watch fast food prices, and fast food prices in the United States, and it for actual inflation and signs of a coming depression, recession, all those things. Now, food prices just in the last few years have increased by 30%. Some people say 50%. I've seen this. I'm tying this all together because Kimberly and I took a friend out to a place that I really love, and the Termite Trading Lab people. We went there the first night in June, abridged burgers and beer, and Saturday night in the summer, and it was cool. Like it was 85, like humidity was down, like the storm that went through Friday like chilled it off here, and I was like, dang, it feels nice out. We came rolling up, and outside tables, there like maybe half of them had people at it, and typically they've got this like wait area outside, and they take names, and you have to wait for a table. They had that all inside, and we walked right up and got a table, and we sat down, and we were there for a little bit, and I turned around, I looked behind Kimberly. I was just at the whole place. I was like, this place is empty. Like, there were only 5 or 6 tables. It was like 7 o'clock at night. Wasn't even near close or whatever. And I was like, where is everybody? People can't afford to go out anymore. It looks like this is scary stuff. Like, it's about to break. It's about to break. My analyst did not write an article, and it was a premium paid update. I can share it. Chris, if you hit me up, I can share some stuff. But welcome to the show. If you're new here, let me know in the chat. I'd love to welcome new people. But I think we're getting down near the end. This is getting near the end. So it's getting concerning. Definitely getting concerning. Altering involves substantial risk of loss. Past performance not necessarily indicative of future results. This presentation intended to be informational, educational, fun, and entertaining, not a recommendation to be buying or selling anything from gurus or in the stock market. No financial instruments, no financial subscriptions, no nothing. All right, don't buy or sell any of it. Don't buy stocks, don't buy options, don't buy bonds, don't buy forex, don't buy futures, don't buy cryptos, don't buy treasuries. Don't long them, don't short them, don't trade them. All right? Think about it. Every trade, buyer, seller, winner, loser. Every trade. Your odds, 50-50. If you just go at it blind. All right? If you desire personal financial advice, you need to hire and consult a financial advisor. Make sure that you trust them. And remember up here, just because I got it right in the past doesn't mean anything I do or anything I ever do again will ever be right in the future, which would be a huge bummer since I love doing this and I spent years trying to figure it out, cracking this nut. And now seems I might have a few things up my very short sleeves. Now, if you haven't heard, last week we rolled out this brand new Apollo algorithm thing. And believe it or not, there's a few of you who have not yet been able to make it to a live show and see the thing. So what I've done, I've put together, let me find the link here. Hopefully I didn't close it. That would really suck. And I put together a new show today. Where did it go? Gosh darn it. I had the thing I just needed to copy, and now I don't have it. Cool. Love it. Love it. All right. Let's make a new window for Discord. Apparently I closed it. And open it up and flip me in here. There we go. Let me grab the link. It's in Discord if you're in Discord. But if you're not in Discord, let me throw this link. There we go. Hopefully this will come through on the chat. Right here. 10:30, right after the show. We're going to go live. Give you one more chance to see it. Right here. In the chat. Right there. All right. And all my blabbing. The market is opened. We have a close order, a close order, a close order. That's 2 of those on the 30-minute, and 1 of those is an echo trade time frame. Right there. Nice. Check them out, see what we got. XLE. Looks like that one stopped out. COP. Looks like that one may have stopped out also. And what was the other one? COF? No, that wasn't the right one. Hit the alerts. Spot. That was the other one. Oh, right to the target. Beautiful dreamer, come back to me. I like to see that. And look, man, this thing's being slow today. Holy moly. Beautiful. Right up there. Apollo, load Apollo. There it is. Right there. Entry, exit, kapow. Right there. Beautiful. Beautiful. All right. What's moving today, though? What can we pay attention to? Wow. Look at that gap up. Holy shnikes. What the devil? Well, getting close to the end, unfortunately. I don't see, I mean, 6,000 all the way back here. For those of you that have been with me a while, all the way back. Let's go up to the daily chart. All the way back here. I was looking for 6,000 as a potential. Many of you probably remember. And we got to put it in the right mode. Yeah. Cool. Love it. All right. This area right here, 5,800 to 6,000. It's kind of the extension target right there. Like, we could possibly get it right there. Possibly. Is it very likely? Not so much. All right, look, we did the pattern right up there, hit the 1272, bounced back down, didn't even make it back to the breakout test, and we've shot up. We can keep cruising right up to this 5,800 level. That's getting near the end. All right. Be very, very, very cautious. Being very long-term positions that you are married to, that you're going to, you'd be like, I can't let it go. Of we're just going to pull back and we're going to go higher. Be careful getting into that thought. All right. We are nearing the end of this baby very, very quickly. Oh, that's a dangerous trade right there. Be very, very careful. We are coming to the end of this party very, very quickly. Now, while I could be wrong, we could just keep going higher forever. That's not typically something the stock market does. The underlyings, look at these. The S5TH is down, was down on Friday. S5FI was down on Friday. S5TW was down on Friday. So the 200-day, the 50-day, and the 20-day all down on Friday, while the S&P climbed to the highest level ever. We're seeing participation rates plummeting as we grind higher. This is very similar to what happened 100 years ago. So dangerous. So very, very dangerous. But that doesn't make us any money, right? Now, what it'll save us money when we turn, being ready to get out. All right, you may take a little hit, but you got to be ready to get out when we make the turn. Now, you're like, well, where's the level? Where's the level? At this point, we're going to have to break back down below 5450 to really indicate we got a problem. Right down here, 5450. That's kind of like the indication that we're going to probably not go higher again. Oh, look, that's where we consolidated right there. We break down below that, probably the party's done for now. Now, if we go on up, that level will come on up higher. But for now, 5450, if we crush that today, not looking good for the home team. All right, that's the level to keep an eye on. On the downside, upside, 5,800, possibly 6,000. Like, can we keep grinding higher? Absolutely, absolutely. Don't turn bearish yet. I've added some protection. I don't know when we're going to roll. I haven't gone big, just little positions. So be careful. No, when the market turns over, Apollo can be tuned for short-term opportunities. Well, here's the thing. It has a wide swath of stuff built into it. Short stuff, leverage stuff, long stuff, all sorts of safe haven stuff. It's got all sorts of stuff that it pulls off of. So, and it's on a smaller time frame. It's on a 30-minute time frame. Now, there's not a drop in here that doesn't have some rips in here. All right, we go back to all the way to COVID even. We had some rips on the dips. I mean, look at this. We had some epic rips. The average trade for Apollo only lasts 3 days. So it'll pick up some of those rips. Even down here in COVID, we had some 3, 4, 5 day rips. Especially right there. Coming off the bottom. Oh, there's a Echo Trade closing out on Dia. Almost all the big drops have had some pops in there on the way down. We can go all the way back, all the way back. Like even stuff where Epic went down, popping. So let's keep it in mind. All right, keep it in mind. We've got you covered. No reason to worry about it till it's time to worry about it. And I can tune it anytime I feel like it. It's not locked in. Not locked in. All I have to do is change the underlyings if I want to. Now, I've kind of built the list based on the top 400 by options volume and a long back tested history. I've been pulling like 60 years of data to power this thing. Think about it. What all has happened in the last 60 years? More stuff than I know of, because that's longer than I've been around. I try to include everything I possibly could into the inner workings of how it works. So, yes, overnight. Jump down. Look at this baby go. Breaking out, running higher. One of these is going to be the last one. Please be careful. Please be careful. One of these is going to be the last one. Is it this one? I don't know. Is it the one when we get to 6,000? Now, ES could be up near 6,000 while S&P 500 is not quite that high. But we also could find that resistance at that 5,800 area, just like on S&P 500 cash index right there. And if you're not familiar, ES is the futures. They opened at 6 p.m. last night. Why do I pull it up and talk about it? Because it gives me more chart data. Whereas S&P 500 just opened up and there's no history, no price action from when it closed at 4 p.m. on Friday until it just opened at 9:30 today. ES here traded until 5 p.m. on Friday, closed up, reopened yesterday at 6 p.m. And we've been trading, rocking and rolling here. Right there, it opened at 6 p.m. right there. That big green bar right there, we had a little dip, and now we're having a rip, and we're going higher. Maybe like JT, does your pattern work? Yeah, absolutely. We're coming up into resistance right there. It's going to be on a smaller time frame right here. Go, calculation, go. There you go. It's a 5-minute Apollo type setup, which is a market roadmap setup right there. 5-minute. The extension target 56.35. This is probably played out. We may see a retrace here. May see a little give back here after we get through the amateur hour. All right, NQ also pushing higher, but meeting some resistance. Meeting some resistance there. Those highs from Friday. Turning down already. That's indicative that we're going to see the turn down. Look at that. NQ is basically flat. ES up 6. A big day for ES is like 30 points. A big day for NQ is like 300 points. So when NQ is like 5 points, that's about to roll. There it goes. About to go red. And then Russell here, it's having a big day. 18 points. That's a pretty big day for Russell here. Pretty big day. But we zoom out and look at this. There's nothing about that. This is small caps. Nothing about that looks bullish at all. That's kind of a consolidation, very bearish kind of consolidation where everything overlaps everything. Inside the range we had there 3 days back in mid-June, 4 days. We're just hanging right in the middle of that range. If we break the bottom, probably going on down. There's a small chance that we break above this resistance right here and break out. Now you'd be like, RTY, how the fudge do I even trade that? That's IWM. And if you're wondering NQ, how do you even trade that? Like QQQ. Maybe you've heard of that before. Right there. So that's the futures for the three major indexes that I watch. Now, some people are like, why don't you watch the Dow? That's like, because it's so manipulated. The numbers are so skewed. I mean, the company that makes the biggest difference in the Dow is UNH. Does that even make sense right now? Not to me. So CL came up, hit the resistance. I wanted to see it get above. We didn't quite do it. We may come back down to the roadmap line right here. The basis of everything. We come back down, find support at the higher low than we had back here. Next target up, 90. Right up there. Be pretty sweet. Sweet. Gold really tried to break out on Friday. Look at that move. Got right into the prior resistance. I want to see that hold here and get going. Hold and get going. That's what I want to see on gold. Silver, we don't typically look at much on the morning show, but looking much better for a breakout. Already got above that resistance there. Doing a little bit of consolidation, but that is really setting the stage to rally to 35 right up in there. And then 40 above that if we can really get going. Now Bitcoin hit the target. Beautifully hit the target right there. On Friday, today, sitting. This is a lower low. It's everything I was looking for. Now we've set the stage for this to go higher. Could it go lower? Absolutely. Absolutely. We had that target down here that we may go visit. But this is beautiful support. It's the pattern I watch. We did the 3-wave move. It's got, when you start counting how many pros, I did this for Termar Trading Labs. You start doing, how do you tip the odds? You start, how many things are going for you? How many things are going against you? The pros for a setup to go higher are pretty stacked with us. The cons are pretty minimal. So it has, at this point, maybe we have the odds at like 70-30. 70% we go higher from here. 30% we come on down. And maybe it's 65-35. But if we can break back above this zone right up here at 63, 64, probably going to set the stage to go to new highs on Bitcoin. Rocking and rolling, baby. Ethereum, the spot ETFs have not been approved yet. We did finally get that lower low. I bought in some position on Friday. Shared that with my crypto power plays people. And ready to go. This correction last week brought everything back into alignment. I was rolling through the charts on my crypto weekly update for the last few weeks, and I was like, something's wrong. We need a bigger flush out. Well, we finally got it and brought most of everything back into alignment. So we're ready to rock and roll. We just need price to prove it that we're going to do it. All right. Don't catch a falling knife. That was a bloody falling knife. If this turns red again today, we can go on down to further support on down below. Dollar almost back to the roadmap line. That's probably going to do it at this point. If we hold here, probably going on up to the target 106.87, if not 108.50. And if we break below this, the party's over. We're going down to the mid-90s. MSTR, big rally this morning on Bitcoin, but we're turning a little red as Bitcoin gives it a little back. Bitcoin gave a little back and came up shy of bouncing off the roadmap line, but this is a measured bounce setup right here. This tips the odds. We could see a rally up here, possibly 2,900 right there. Maybe like, no way, that's more than double. Yeah, more than double on something that's highly volatile. There's ETFs coming, leverage ETFs. This thing's going to be absolutely ridiculous when Bitcoin rips. MORF. And look at that pop. Nothing you can do with that. Nothing you can do with that. We've got resistance right up here. And we're just back to it. Nothing. SMCI on the poppers list, but we're still below resistance. We've hit high. We've lit resistance before we dipped. Resistance after we dipped. Resistance again. Resistance yet again. Nice rejection. If we can break through it, tips the odds we're going on up to 1,400. If we don't, probably coming down here. 400. Yeah, that's a big range. Be freaking careful. This is a dangerous, 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 dangerous chart pattern. And it looks just like, let's pop over here for a second. Humor me for one moment here. Let's clean this up. Let's go to SMCI. Let's go up to daily. Let's remove this off the chart and turn off the Apollo thing. Look at this right here. So when we zoom this out, look about like that, right? Everybody see it pretty clear? We've got this giant run up. This, we've got an initial move down, and then we've got this consolidation in here like this. This looks, if you haven't seen this before, it looks just like this. This is not just a market cycle. I call it the bubble cycle. You can go Google this chart and see it 900 different ways, but that comes up, get the pullback, get one of these consolidations. It's usually on things that are hyped up. People were saying for a lot of months, just buy NVIDIA and SMCI. You're going to be rich. You know what comes next? People lose their money. Be careful. Be careful. Yeah, if you want the market roadmap line, if you wanted that roadmap line on your chart, TradingView is free to use. And I have it for Thinkorswim, and I tell you how to do it on other platforms. But if you want that, link is in the description. Click the more button down below. I also have the link for the 10:30 a.m. show for Apollo right there. So be careful on SMCI. I don't care how much it's popping today. The downside risk is highly elevated. We're like 70% going down, 30% possibly going to new high. Be careful. IDYA, despite the pop, that looks like we may going down. That's still lower highs. Be careful, be careful, be careful. Lower highs, lower highs, lower highs. If we don't break it, that can still go down lower. TSM. Oh, nice. Getting close to the target at 200. Where do we go from there? Makes it highly likely we're going to see some sort of pullback, maybe back to this 170 area before we can go higher again. But it can keep grinding higher. 200 is the target up right now. It's been the target for a few weeks. Spotify. Ooh, getting a little pullback there. It was popping, now it's dropping. All these tickers in the first bit were all up pre-market, $2 or more. Flutter Entertainment coming up into that resistance zone. If we can get above it, get above this prior high. So that was a nice three-wave move right down. Came up a little shy on the support that I expected, but that can be it. We break above that high. Probably going up here, 240, possibly 260 on the pattern. It's the same pattern that powers Apollo, by the way. Right here, coin. I really, really, really want to see this hit the roadmap line, that orange line right there. I've been waiting to buy my position. Just been waiting and waiting and waiting and waiting and waiting. ALV, auto live. Hanging out below the roadmap line. That can be bearish. Watch for resistance at that 112, 115 area, and it turned down further. If we can get back above, we can go cruising way on up here. Way on up here. It has the setup. It has the breakouts. Retesting the breakouts. If we can get going, large potential upside on ALV right there. NVDX is a 2x leverage on NVIDIA. Watch out for leverage. Be freaking careful. Leverage stuff is super dangerous. Super dangerous. Doesn't always follow the patterns. So support all the way down here. And I've talked ad nauseum about how much money it takes for NVIDIA to go higher. It got downgraded today, although we're seeing a little green on it. Be careful, be careful, be careful. The downgrades are probably going to come fast and furious, and that looks like a three-wave up. We're right at resistance. This can take another spill down. Be careful. Target dog. Got the retrace. If we can turn this around, that was right. Double tap the support right there. Could go a little deeper, down to 128, but holding right here, breaking back above the gap down from over here, back above that 160 area, sets the odds. We're kind of cruising on up to like 275 up there. That's a pretty good, you could buy some shares and make pretty dang good money on that. And now, how long would it take? Probably well into next year. Based on that move right there, that retrace there. I mean, that's October, November, December, January, February, March, April, May, June. That's 8 months. We could easily take another 8 months to do the next rally, or even twice that long, 16 months. So we'd be talking about way out here in 2025 before we got up in this zone. FSLR looking pretty ripe to come on down to the roadmap line. Come on. One little flush can get us there. ZAPP, Zap Electric Vehicles Group. That's a dumpster fire, baby. Dumpster fire chart. Ooh. I guess that was a SPAC. SPAC up here. And we SPACified it and went down. Did a reverse split. 1 for 20. Don't get involved in this. It's basically all the makings of what I call a dumpster fire. This is riding on hype and probably going down here. LABU. That's biotech for you. Be careful on biotech. It got really boring. Look at that. It's basically a watermelon seed squeeze right there. Right there. Coming into a tight range. It's going to pop or drop. I don't know which one. I don't know. Unreliable pattern. And it's leveraged. Like 3x leverage on something unreliable. Be careful. AMD, look at that pop. I wonder if I got out of my position automatically. Oh, man. Maybe a rally up to 191. That was really sweet. That was a bounce on a lower time frame. Probably, is that the 1 hour or the 30 minutes? That was a 1 hour. Right up to the target. Cha-ching. Took a while. Took a little longer than normal. That one set up the entry back there, and it took all the way over here. That one took 43 days to play out. GLW. Corning. That's Gorilla Glass, right? No, maybe. I don't know. Corning Electronic Components. I don't know. Anyway, potential to retrace. Potential. Looks like the last little squeak before we get a bigger retrace. Support down here around 35. Extension 42 maybe. Other than that, I don't know. USD. Still expect this to come back to the roadmap line. Could it go new high? Could. Resistance on the upside 200. Support down here 94. That's a wide range. Be careful. No high probability. NVDU, another leveraged NVIDIA. Paramount Global. Didn't they cut a deal? Did they cut a deal or are they being bought? I don't know. There was some buyout deal that to go through. Maybe that's it. Yeah, Skydance deal. Paramount Global agrees to the Skydance deal. And yeah, there's some merger and acquisition in the entertainment space, basically. Oops, clicked the wrong thing. ENPH. We're at support. Can we pop? There's resistance, 119. We get above that, we can go higher. If we break down below the support, we're probably flushing on down here, 59. That's the NPH for you in a nutshell. That's the long and the short of it. Now, Service now. Yeah, we're in the decliners now. These are things that were down $2. All the ones I usually start with the poppers. Now, why do I go through decliners? Because, well, a lot of times we find opportunities here. Now, service now, looking for a retrace on back down to support. Now, it did come up shy of the target, so this it may hold here and go rocking higher. 840 area would be the target up there. HLVX. Holy guacamole. This is why I don't play biotechs. We were cruising up here, and now today we're down here with an 88% drop. 87% drop. Ouch. Ouch, ouch, ouch. FDA, man. They just approve or deny your stuff, and then you're effed right there. Nothing to do about it. That's why I don't play biotech. Now, Tesla coming up into the resistance zone. If we get above 265 before earnings, that's going to be absolutely nuts. And we're probably going to come all the way back down to 200. Be careful. Even if we stop right here into earnings, and it's coming up quick. Coming up very quick. Earnings right there. So we got just over 2 weeks. 2 weeks and a day. We're going to get a pullback. She's going to do that. Find support, and then it's game on. Be careful on Tesla. That would be time to book some profits, not be messing around. But this is a bullish pattern, so we may only see a pullback into... Ooh, man. Hold on. Hold on. We may not go back to 200. Hold up. Saw something else. Oh, yeah. I've already got that drawn. Okay, so resistance. If we can hit this level right here, we're probably only going to pull back. I gotta turn some more fibs on. Wronger's gonna love this when he gets back. He's got 9 more days till he's back. 9 more days till he's back. All right, where'd they go? I just turned it on the wrong one. Gosh darn it. There we go. So here we go. Big if, capital if we rally to here in the next 2 weeks, we might find support right here on earnings and then go higher from here. 296, 300 area. This is a very bullish potential right here. That's a brand new entry on Apollo. Let's go look at it. Yeah. Not the best looking chart, but yeah. That's the high, that's the low. Turn on Apollo, just double check. Yep, right there she is. That's the buy. We got the kind of close above the 618, and the target's going to be up here at 74.80-ish. Let's go look. Let's go see what we got. 74.80, right on the money. Spotify worked out right there. Cha-ching. It was entry late on Friday. Worked out first thing this morning. Yeah, I love this thing. I built it for me, and I'm giving people an opportunity to see it. So that'll be coming up at 10:30, right after we're done here. So 30 minutes from now. Just so you know. Just so you know. Throw the link in the chat again. If you want to come join me, find out more about it. Right here. Right there. KOLD. Natural gas ultra short. Getting a little bit of pullback. And we'll just go look at natural gas, shall we? NG1 exclamation point. 30-minute time frame. Finding some resistance. Looking at the daily. Ooh, man. Ooh, man. So support is right down here. We're not quite there. May see a move down to this $2. Now we could find this could be support. It just got a little extra. So if we break back above 240, let's say 250. If we break back about 250, probably cruising up to the next high up here around $4. If we break down, well, if it starts being red, we're probably going down to the $2 area right down here. If we find supports, we're going higher. If we crush that and keep going down, we'll probably come all the way down to like $1.30 on natural gas. And you'll be like, how do you trade it? Something like UNG right here or KOLD here. This is a leveraged short. That's what ultra means. Anytime you see ultra, right here, come on. Anytime you see ultra, that means leveraged. Be careful on leverage. I don't know how many times I can say it. And short means when gas goes down, then natty gas goes down, this is going up. All right. Celsius Holdings, man, having a rough time there. This thing's been banging, but not since the split. Not since the split. 3 for 1. Just kind of messing around here. Consolidation. And I expect support to hold here before we go higher, but it's been on a heck of a run. It may need a bigger, deeper retrace. And it could go pretty deep, pretty gnarly. KOSS. Costs. It's audio equipment in it. That chart looks gnarly. Oh, I see what I turned on. I see what I did. Yeah, resistance there. Possibly. This could be bullish if we get up to that 23, but stopping where we stopped is not clear. That can result in a bearish move because that's a 3-wave. Very typical of continuation lower, which would basically put that down in dumpster fire territory. SBIT, short Bitcoin. This is the resistance zone right in here. Like it pushed it a little higher than I wanted to see, but be careful. This can drop the freak out. All right, it is ultra and short, so that means this goes up when Bitcoin goes down, or this goes down in a leveraged fashion when Bitcoin goes up. Be careful. XOM, messing around, looking for a roadmap line bounce. Let's just clear the chart. Clicked on the wrong thing, remove all the drawings. And that high, that low. If we can break above, gotta reset my fib lines because they're annoying. If we can break above this 118, you set alert on this one. Set alert right there, 118. We break above that, 126 is the target. Right there. Now, if we don't do that right now, if we go lower low, pattern's done. So set you another alert down here. If we break it, game over. All right, don't trade it. ZIM, and that's the same pattern. I'm building a daily alert system for Apollo, or powered by Apollo, basically the market roadmap system in an automated way. ZIM looks like that's a 3-wave retrace kicking off. Probably going to come down a little bit further, right down this zone. That roadmap line probably going to come up here. And all these things probably going to come together right in here. Click over here. There we go. So maybe another couple weeks before that one bottoms out right there. All right, that's the list for the day and bias for the day. Kind of went through this a little bit. At 54.50, if we break below it, watch out. 54.50. If we don't, well, next stop up here, 5,800, possibly 6,000. And if we do that fast, the correction is going to be wicked. If we do it slow, the correction is going to be wicked. All right. Hopefully you understand. The correction we're facing right now is going to be wicked. It's going to be rough. Maybe even COVID-like. And maybe it'll last a while. We could be staring down the Greater Depression at this point. There's a lot of things that look pretty, that kind of scare me in the market. So, if anything I said was interesting, beneficial, give me a thumbs up on the video, share it with a friend that may find it interesting. I'll be back live 9:15 tomorrow morning. Same bat time, same bat channel, right here on YouTube. Set your alert in your phone or hit the bell with the notifications down below. I'll see you tomorrow. Bye for now.